We're going to go ahead and do a macro technical and structural analysis for Bitcoin today, discussing the price action leading into 2023 and beyond. Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you guys had a fantastic Christmas yesterday with family and friends and loved ones. And of course, if you're in America right now, it currently probably is still Christmas. So if you're celebrating, I hope you have a great time doing so. We're going to go ahead and jump into Bitcoin today and talk about the price action as of now, as well as what we expect the price action to do throughout 2023 and of course leading up to 2023. We'll also look at the short term and run a quick technical and structural analysis. Before you get into today's video, go ahead and smash that like button, hit the comment button, and subscribe to the channel if you are new for daily Bitcoin videos. We focus on the charts, the objective facts, the structure, and the technicals alone. Let's go ahead and dive in, but before we do, one more announcement. We do have our Telegram channel, which you can go ahead and get access to via the second link in the pinned comment down below. Got updates on all of our charts, analysis, information, videos, and more. And of course, we do actually have our 29th of December New Year sale starting in a couple days. So on 29th of December, this will be for our trading channel, our VIP channel, where you can see all of our trading track records over here. And of course, you can see all of our details over here. Let's go ahead and dive into today's video, and we'll go ahead and start with the market data. So for December, 1.89% in the red, and for the quarter, we're at 13.05. Again, for the quarter to turn green, which is looking incredibly unlikely now, with only a couple days left of the month, we do need to see a push past $19,000. Very unlikely to see. I do not think that's going to happen. If it does, it will be quite surprising. Moving on, volatility is dropping, and again, this is expected as the price has continued to push sideways over the last 7 or so days, particularly leading up to the Christmas period. With lowering volatility, we do usually see decreased volume, and of course with decreased volume, we see less price action and of course less liquidations as a whole. Looking at the DXY, the DXY is very much in exactly the same position as it's been for the last few days, which is in this consolidation phase at the bottom of what we would call some sort of descending channel. A falling wedge potentially, or a descending channel. Again, no matter which way we spin it, this is a reversal pattern. It is eventually going to see some sort of reversal over here, which should take us back to 106 to 107 zone. And as we can see on the bond yields, we are starting to see our 2-year and 10-year push upwards, coming closer to their key rejection points, being the 3.8% on the 10-year, and of course the 4.35 to 4.4% on the 2 years, indicating again a potential point of resistance. But if it does clear those levels, we can see the DXY follow suit and push back upwards to the 106 to 107 range, which will result in the S&P 500 and Dow Jones falling. So the Dow Jones have actually broken out of its bear market downtrend over here. We have developed a uptrending resistance level over here, which was our bearish divergence, which resulted in rejection and the price pushing backwards to the support level between 33,000 and 33,600. Currently see any sort of move to the upside, we will need to reclaim the $35,000 level to see a push back towards these highs. Until then, this downtrend is very much active and we can expect a continuation towards 32,000. S&P 500, exactly the same thing. For us to see any sort of continuation upwards, we're going to have to see a break over these local highs of here around 4,100. That will result a push back up to this neckline, where we'll get that next rejection or potential push back upwards to our upper highs. Until then, we are still in a downtrend after breaking down from this rising structure, this rising wedge formation, where we've broken to the downside on the FOMC release, on the CPI release, and of course created a downtrend, which will actually end up resulting in the price pushing towards this level if we do not reclaim these highs at some point. Let's go ahead and dive into Bitcoin. We'll talk about the short-term structure, talk about the price action, then we'll do our technical analysis on the smaller time frame, and then we'll go ahead and do our structural analysis and talk about the price action on the larger time larger time frame, sorry, and then jump back into the technical analysis on the larger time frame. So it is small time frame, then large time frame. So let's go ahead and jump into it. So from a structural standpoint, again, we haven't seen a lot happen. Over the last, we're looking at nearly 10 days, Bitcoin has not seen anything more than a 4% range. For the most part, however, if we go ahead and eliminate these outliers and wicks, Bitcoin has stayed within a 2% range for the last 10 days. And even if we consolidate smaller, we're looking at a 1% range. So it really hasn't been almost any price action for Bitcoin over the last 10 or so days. And we do expect this to be coming to an end at some point as extended consolidations generally result in larger moves. We've seen extended consolidations in the past result in larger moves, and that is because volume starts decreasing, volatility starts decreasing, and overall price action condenses and compresses. As it compresses, as it condenses, it generally breaks out as soon as we get these volume surges. So we're looking at a few things over here. From a horizontal standpoint, you can see we are very much above the support level over here, which we've retested a couple times in the past as resistance and support. This basically formed the basis of support for this entire period between the end of November all the way up to the 14th of December. So about a 2-week period, we had that base of support developed at around about the 16,800 level, which we are currently holding on to now as support. Losing this support line, and again, probably losing the support line, will result in a continuation downwards. However, not just losing our support line is required, we're actually going to need to break down from our uptrending diagonal line, which we've been developing again over the last 10 or so days. So a combination of a breakdown from this uptrending support line as well as this horizontal support line should result in Bitcoin actually going ahead and initiating that next leg towards the downside. Bring up the VRPV here, we can see we do have temporary support within this range around 16,550, but our next major horizontal chunk of support is going to be sitting down at 16,200. So the next leg down will initiate when that occurs. But looking further to the downside, if we do break through these levels, we do have major support down at this 15,800 range. However, I do not believe if we retest that level, we were going to hold it. If we retest this level, I do actually believe we're going to be falling through it and to the downside, which will take us all the way down to about $13,900 to $12,000. And that would be that final leg down for Bitcoin if we do continue to the downside. We'll be talking about that a little bit later on into today's video. For the upside, however, nothing in my eyes is looking like a good buy for the upside until we are able to reclaim this red zone. This major June to November resistance level is what I believe we are going to need to reclaim to see any sort of macro reversal initiate, and that is what I'll be waiting for to see any sort of strong swing to the upside, particularly if I was looking for a swing trade. If I was looking for a scalp trade, I'd be looking to take orders above some of these higher wicks. So we're looking for orders above these levels, potentially looking for entries if this horizontal support level of 17,000 is broken and retested. We can look for a swing back up to 17,400, and of course resetting that position above 17,400 if that is retested back into that level. Until then, again, we are very much in a neutral zone, pushing between these two horizontal resistances and supports, sitting around 16,800 and 17,000, a period of indecision spanning what has been now about 10 days. So let's go ahead and do a technical analysis now for Bitcoin on the smaller time frame, and then we'll go ahead and talk about the larger time frame, where we think the prices go on the larger time frame, what we need to wait for actually looking for entries, our technical analysis, and of course the 4-year cycle and what we expect to happen pushing into 2023 and of course within 2023 for Bitcoin. So we'll start on the 4-hour chart and bring up a few indicators. We'll go ahead and start the RSI and see what our momentum is doing. So on the 4-hour chart from the RSI, we are not really seeing too much. What we did see over here was quite interesting. We did have this downward sloping resistance on the RSI, very temporary downward sloping resistance on the RSI here. And of course, we did actually see in the last couple of hours a breakout A very slight breakout on the price action chart over here, according to the RSI, but again, nothing too significant here. These moves in the last couple of days, due to the low volume and volatility, have been incredibly small. So even if you caught that breakout, you're only up not even 0.5%. It's almost pointless in my eyes for looking to jump into something that with such large downside risk at the moment. So waiting for those higher levels would be ideal. From the perspective of the 4-hour, it isn't looking too clear. As you can see, there has been a lot of consolidation and chop within this range. And generally when we have a lot of consolidation, a lot of chop, a lot of weird swings to the upside and then back to the downside, our technical indicators do get a little confused, okay? Because they are lagging after all. So it ends up giving us more mixed readings or uncertain readings on the smaller time frames. So what we'll do is quickly jump to a 12-hour chart and see if we can notice anything different. So on the 12-hour chart, we do have a uptrending support line, of course, over here, this being our uptrending support line, pushing between this low here and of course our prior low over here. This is of course our structural uptrend, depicting the uptrending support of this entire structure spanning between the beginning of November to present. And however, keep this in mind, this structure is sitting just above that 16,200 level, and I'm going to go ahead and map that out. The 16,200 level was actually that lower horizontal support range sitting over here. And that is what I was saying. If we do push through that level, we push back down to this 15,800 level, we are going to be breaking not only these horizontal supports, but as well as our uptrending structure of the last 2 months of price action, and therefore the probability that we go ahead and lose these levels if that occurs is much greater. So from the RSI on the smaller time frame, it's not really telling us anything too significant. We're going to have to go take a look on the larger time frame later on. Let's take a look at our moving averages and our VRPV. So VRPV is interesting here. On the 12-hour chart, we can see the price action is sitting just slightly above the VRPV POC. The point of control is the exact horizontal price range of which the most volume and trades have occurred within the range visible on the chart. So as I zoom out, you'll see it accounts for more of the price action and the POC should shift. In this instance, it hasn't. If we zoom out more, it will. But all in all, it indicates the point of most support and most resistance based on historical trading volume. So right now we do have the price over the POC, which is a very good sign. The POC is sitting at 16,824. And due to its sideways consolidation here, it is mainly pushed upwards from the 16,500 level where it was priorly sitting and is now pushed back up here. So this is a good sign for Bitcoin. Of course, we have the uptrending support line here. We are coming close to that horizontal resistance. There is a possibility that if Bitcoin can push through this horizontal resistance that we showed you on the chart previous, I'm going to go ahead and bring it back up. It will enable a swing back up to that 17,400 level. 1 second, here it is here. So the POC level is sitting just around 16,800, which is this 50 EMA area. We do have that resistance level here. If we are able to push through here, we're going to have support from the horizontal. We're going to have support from the 50 EMA. We're going to have diagonal support. We're going to have horizontal support below us, as well as support from the POC level. Again, all of these confirming a possible swing and basis of support that will facilitate a continuation back upwards to that 17,400, 17,200 level. And again, these little stepping stones are required to be taken to enable or facilitate any sort of retest back into this range, which is where we're primarily concerned with. Let's go ahead and take a little bit of a look at the larger time frame. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. So the structure on the larger time frame is very interesting, as we have a bear market downtrend, which is our descending channel. This is in fact the bear market. Extensionary from that, an extension from the bear market, we have our falling wedge structure. So we have a bear market, and then we have our bullish reversal structure developing out of the bear market. Now, this is generally quite common for macro downtrends. You'll see it a lot in altcoins. You actually see it a lot in descending channels in general. Descending channels don't generally just break upwards. They generally develop reversal patterns within and throughout the ending point of these channels, and those structures are what determines when these reversals and where these reversals actually occur. I can show you a few examples. The best one that comes to mind is a Solana chart. Back in April, it broke up and it did a 40-50% rally. That is my best example off the top of my head, but you can see it and do see it quite often. It's very, very common to see, particularly when we go to much larger time frames like yearlies and dailies. We generally develop patterns within patterns, and the smaller patterns are developed within larger patterns, and those smaller patterns facilitate the breakout and reversals of those larger patterns. So that is what we're seeing here. We are seeing a bullish reversal pattern developing at the end of a confirmed descending channel. Confirmed because we have 1, 2, 3, 4, 5 points of retest, 2 on the bottom side, 3 on the top side. Again, that is validating the structural requirements of a descending channel. That is telling us that this is in fact a descending channel. These particular points are in fact the resistance and support points, and right now the price is actually sitting outside of that descending channel. Of course, you can say technically the price is out of the bear market resistance. That would be technically correct. We are technically out of the bear market resistance. However, the price is still within the bounds, okay, of a structure that was developed within and throughout the bear market. And therefore, for the price action to escape the bear market downtrend, it will need to break through the structure that has developed within that descending channel, being that falling wedge downtrending resistance from point of August, retesting on November, and is currently sitting around about 19,000. No coincidence, 19,000 is the monthly open, and again, 19,000 is the POC level of the June to November low, and even more, 19,000, according to historical volume ranges, is the strongest resistance Bitcoin has seen in over 4 years, 5 years even. It's a very, very big resistance. So for us to break over what would be such a large resistance, plus breaking out the bear market, plus breaking out of our falling wedge structure, plus the 50 EMA will break, plus the RSI and the weekly will break at that point, will be enough to validate a macro reversal, okay? How high will that macro reversal go? This is something we'll talk about today, because we'll be talking about today, again, what we expect the price action to do in 2023. So it's very important. We'll discuss what we think is going to happen after this breakout. We haven't talked about it before. We'll talk about it today. But before we get into that, I want to talk about the 4-year cycle, particularly the percentage drawdown and potential bottoms for the 4-year cycle. Then we'll talk about when the bull market will start, 2023, 2024, and then we'll come back and talk about our price action, particularly where we think the price action is going to go for 2023, particularly breaking out of this structure. So the 4-year cycle is right over here. You can see a few things. You can see the percentage drawdown from tops to bottoms in cycles of 14, cycles of 18, and of course 2022 bear markets. You can see that each cycle lasted around 12 to 13 bars when it comes to bear markets. If it holds true to the 4-year cycle, we are coming at the end of our 13th bar. So by probability, by what we've seen in the past, the bottom has statistically either been in November at a 12-bar period at 15,500, or we're going to see an aggressive leg down within the end of this year, taking us to a new low or potentially initiating a new leg down and pushing the price back downwards. Where can Bitcoin go? According to the 4-year cycle, it's looking like it can go down to about $11,000, according to that 84% drawdown. But again, with diminishing returns, with lengthening cycle theory, and again with the displacement of money effect, we can expect as the total cryptocurrency market cap gets larger and larger and larger over the years, the percentage drawdowns from bull market tops to bear market bottoms will naturally have to start decreasing. So it is actually very bold to assume we're going to see 84% drawdowns time and time again. And that is why I believe that a drawdown of 77% sounds more logical if we take in consideration those factors. So assuming the bottom has already been in, again, it's not confirmed. For us to confirm that, we need to see a macro reversal. We'll come back and talk about what we need to see in a second. But assuming the bottom has been in December this month or even November, that would take the new bull market until 15 to 16 bars, which is April 2024. Between March and May 2024, the new bull market should actually begin. So what will happen in 2023? That's the big question. If the bull market's going to start in 2024, according to the 4-year cycle, and we're most likely reached the bottom already, what is 2023 going to do? Is it going to be a boring year? Are we going to see price action? What is going to happen? Let's get into it. So what have we seen before? Because when it comes to technical analysis, what we do is we look at prior data, whether it be price data, technical data, whether it be economic data. We look at prior data to infer what the future could potentially be. That is the basis of all analysis from a technical standpoint. So we're going to go ahead and take a look at the prior cycles and see what commonalities we can find, apply it to the current cycle, and create some sort of framework or theory we can go ahead and build off, then go back to our structural chart from the Bitcoin chart and see how those levels would actually come into play to see if we can validate anything. So what we've seen before, every single time we reach the bottom, we start an uptrend. Very obvious stuff. You reach the bottom, you start an uptrend. That uptrend is sometimes aggressive, like we saw in 2018, where we saw a very aggressive rally around 340% over a couple months, or a little bit slower, like we saw in 2015, which took 16 months for us to even reach that 160% rally or 200% rally for us to reach that bull market beginning. But in both scenarios, we have seen a very strong rally. In both scenarios, we saw over 150% rally. So assuming Bitcoin is going to see a similar thing from the bottom, and assuming the bottom is already in, taking that upwards to about 150% will take Bitcoin to around, if we go conservatively, I'd be looking at around $30,000 to $48,000 before April 2024. That is a very significant move for Bitcoin, if you think about it. We have to get out of the fact that people are accustomed to 400% moves in a week from the bull market. A lot of people in crypto jumped into investing, jumped into trading during the bull market. Everything they saw was 400% rally, 200% rally, 100% rally. Shitcoins going up 10,000% over a matter of days. This is not traditional investing. This is not normal in markets. Generally, it happens every once in a while, and we usually see it in a bull market. For a general market, a 200% rally is absolutely insane. So from the bull market, bear market bottom to the next bull market is the best time to be looking for projects that you could jump in on early. It's the best time to be paying attention to markets. It's the best time to be acquiring wealth, trading, and building capital so that when the bull market does come, as you can see, you are ready. Because when the bull market comes, guys, look from this green line onwards. It's basically green candles. 3,000%. Bull market comes, it's basically green candles. 500%. We just see green candle, month after month after month, okay? These are massively long drawn out red candles start to slow down as we reach that 13, 12 bar period, and then it is slowly developing an uptrend from there. And the uptrend begins from the bottom to that green bar over here, okay, and continues more aggressively in a more parabolic rally when the bull market begins. But we do have to remember, the uptrend is closer than you think based on the 4-year cycle. okay? Let's go ahead and take a look at the Bitcoin chart. So, where will that take us? Let's take a look at our zones and levels. The most important level for us to break past is going to be the $30,000 yearly low, as well as a $48,000 bull market trigger. That is what I call it. The $30,000 yearly low and 48,000 bull market trigger. 48,000 bull market trigger first and foremost. If we break over that, we are going to a new all-time high. We are going to go to a new all-time high. I can say that with a lot of confidence. $30,000 is the main rejection point we do need to break past to confirm the fact that we're going to see a slow and gradual macro reversal that's going to develop into a bull market. Because this is the low, okay? This is the yearly low point of the prior bull market rally. So if we push upwards here, this is going to be a heavy rejection point. This rejection point could potentially take us all the way back down if we develop an uptrend here into new lows. That is very, very possible. However, if we are able to push through that level and over that resistance, that can potentially take us upwards, okay? So on the smaller time frame, what are we looking for to facilitate that? Well, we need to look at our prior levels. So we're looking at this level over here between 22,000 and 24,000. The first initial target, if we break out of this falling wedge, will be this red level, 22,000 to 24,000. This will be a rejection point again, or again, if we break through, it will facilitate a move through its lower volume range up into this $30,000 level. Okay, guys, keep it simple, keep it obvious. The charts tell you exactly what to think. Okay, we don't need to overcomplicate it. Again, to the downside, using the VRPV, you can see if we start losing that uptrend we talked about at 16,200, you can see almost immediately our volume and our VRPV starts to drop off. We're gonna see a pretty strong retaliation towards the downside between 13,900 and $12,000 if we drop towards the downside. I'm gonna leave the video there, guys. I hope you enjoyed today's video. If you have any questions, leave them down below. Join our Telegram channel, sign up to Bitget, and of course, I hope you guys had a great Christmas. And if you're in America, I hope you guys are having a great Christmas, and I'll see you guys tomorrow. Cheers.